My name is Darren Joseph from HTJ.tax, and we're the team that seeks to demystify the sometimes confusing world of international tax. And today we have the honor and privilege of having another conversation with Mark. Mark, could you introduce yourself?
I'm an advisor to the entire financial industry on CRS, FATCA, and CARF, and I've advised the OECD and the EU Parliament and the EU Commission and the German government, etc. All this is on my website for anybody to look at.
Fantastic. How is FATCA enforced?
They kind of make the financial institutions deputy sheriffs to implement and enforce the FATCA rules. What's the main enforcement methods that they use? Number one is that there's a 30% withholding on withholdable payments to non-participating foreign financial institutions. A non-participating foreign financial institution, NPFFI, is a financial institution that's not FATCA compliant. Now, I've seen people write articles that only mention the one way that a institution can be a non-participating, but this can arise in one of two ways. One is the financial institution is located in a jurisdiction that does not have an intergovernmental agreement with the US. And the financial institution has not entered into a FATCA agreement with the US that requires direct reporting. There's about 100 countries in the world that don't have a FATCA agreement, but most of the financial institutions in those non-participating jurisdictions, they still enter into an agreement because they don't want their clients to suffer the 30% withholding. That's the first type of non-participating financial institution that doesn't enter into the agreement and is located in a jurisdiction that doesn't have an IGA. The second one, which is the most common, is the financial institution is classified by the IRS as being a non-participating financial institution following the conclusions of the procedures for significant non-compliance being undertaken. For example, a UK financial institution will only be classified as non-participating foreign financial institution where there is significant non-compliance with the UK legislation after a period of inquiry that non-compliance has not been addressed to the satisfaction of the HMRC. In this case, UK financial institution details may be published electronically by the IRS, and the financial institution will cease to be covered by the agreement.
Right. That's really critical information. The idea that, and to some extent, it was unprecedented at that point in time, that the IRS has basically enlisted financial institutions around the world to act as enforcement officers for their own rules. And just to kind of reiterate what you've said, it operates on more or less three levels, right? The government may or may not have signed an intergovernmental agreement with the US, whether it's a Model 1, Model 2, they would have signed some sort of agreement. But many didn't, but many did. And then taking that to the next level, the government would pass enabling legislation domestically. Legislation that seeks to set aside domestic bank secrecy laws and require financial institutions, domestic financial institutions, to go through their books and through a series of indicas, the number of indicas named, they would need to identify who may be US account holders and would require them to report these account holders either directly to the IRS or via the domestic competent tax authority, whether it's Model 1, Model 2. And then on a third level, FATCA, and I perhaps touch on it later on, it would require US taxpayers to do some extra compliance work as well, in addition to the compliance obligations that existed before, the additional compliance obligations. It operates on multiple levels, and basically the world's reserve currency is the US dollar. So if you have a financial institution that is subject to withholding payments, which essentially locks you out of the US dollar network, you cease to be a functioning bank. And so that is a serious threat to the survival of the financial institution. So there's a serious incentive on some level to comply with these international rules because that 30% withholding is pretty aggressive. And with that, Mark, thank you very much for the pleasure of your company and sharing your insights. And if someone wants to reach you, what's the best way to find you?
The best way is just to go to my website, which is co-ownershiptrust.com.
Thank you very much, and we'll see you next time.